Ladies and gentlemen, I have been predicting the stock market crash for months now. Now, I did a segment in the middle of the night, or actually the middle of early morning yesterday, that nobody watched. And I said Bitcoin would get to 10,000, the Dow would get to 20,000. I explained why the market will crash. I explained, like I do on the Stock Market Crash channel, but I did that segment on Bitcoin on this channel prior to the Alec Baldwin segment just now. I explained exactly why raising interest rates will not stop or prevent inflation from soaring and tanking the economy. If you raise interest rates, you're going to tank the stock market. If you don't raise interest rates, inflation will tank the stock market. It's a simple calculus or unfortunate reality. It's a sword of Damocles that we are presiding under. And this was the fault of people who ended economic activity 2 years ago gleefully. The road to you-know-where is paved with good intentions. Hit subscribe to this channel right now. Look at this chart. Look at this stock market chart just for 5 days. For the past 5 days, the market has tanked 1,597 points, almost 1,600 points. That's just 5 days. Now, I believe this is the beginning of not just a correction, but a devastating stock market crash. You could see perhaps a correction in the next couple of weeks, but that's going to lead to a crash, or you could just see a devastating spiral downwards. You have trillions of dollars and hundreds of billions of dollars in derivatives trades on margin. So you have billions, possibly tens of billions, possibly hundreds of billions of dollars in risky derivatives trades from hedge funds like Archegos that went under, unregulated, not regulated by Dodd-Frank, or not yet regulated by Dodd-Frank. That could tank the market. You see corporations like Evergrande, real estate property development companies like Evergrande in China defaulting on debt. You have just in the past 5 days, ladies and gentlemen, broken supply chain issues, inflation, key labor shortages, leading to about 1,600 points taken off of the Dow. Okay, so you just look at this chart. 5 days ago, it was at 36,449. Okay, the highest was 36,000, almost 36,500. In just 5 days, it's now 34,700. Okay, in just 5 days. Now, if you look at within the past month, you have now it's at now 34,715. On January, it's at 36,800. Okay, this is going to be a terrible year for the stock market. Investing, it's not going to be a good year for the economy, unfortunately. But I want to just show you this article really quickly, okay? If the Fed wanted to stop inflation, it would need to hike rates nearly 6%. And this is Interactive Broker founder Thomas Peterfee says he is worried about the higher interest rates coming soon from a Federal Reserve behind the curve on inflation. Okay, if they wanted to, according to numerous experts, well, Peter Schiff probably says you'd have to increase rates a lot more than 6%. He thinks that inflation is at 15% right now. But for them to address inflation, because we have oil that could go above $100 per barrel, okay, because of the situation, Ukraine and Russia, and then you have Taiwan, China, and then you have other geopolitical calamities that could take place. Inflation is at record highs everywhere, not just the United States of America, the European Union, countries within the EU, everywhere. It's at record Canada, Australia, it's at record highs everywhere. And the smartest people in the room did this to us because, well, you know what? The road to you-know-where is paved with good intentions. They said, well, if we just end economic activity, we won't have to obsess over you-know-what, and everything will be fine. And of course, that didn't happen. But imagine if they only want to raise rates up to 2% from around zero now in the span of 2 years. So these people are saying, you're not going to even make a dent. You're not even going to stop inflation from running rampant unless you increase interest rates 6%, which would absolutely devastate the economy. That's obviously not going to happen. The point, though, is that you have inflation that is so detrimental and so rampant and runaway, okay? It's not just momentary, which is what the Fed was talking about. But look at this chart. In just 5 days, you have what I've been telling everybody. Now, people might say, well, you know what? This isn't that interesting. I don't see a stock market crash. I don't see a financial calamity. There's no catalyst. There's no, Bear Stearns or Lehman Brothers moment. There isn't a too big to fail moment. Well, there might not be a too big to fail moment, but there could be hedge funds that collapse. Or it could just be that investors say everything's overvalued and corporate profits will decline because people don't want to spend money that they don't have anymore for higher prices for goods and services. So corporations have been charging far more than inflation for goods and services. So they've been they've been raking in money and profit. That's why you have record profits. But if you look at the S&P 500, 30 to 40% of the profits there are technology and banking. And you just recently had Goldman Sachs say, they missed earnings. And it was because of weaker than expected trading revenue. And you still have $1 trillion in margin debt. So if you look, ladies and gentlemen, you look at this within the span of 2 days, you have 1,600 points down. 5 days. Within the span of 5 days. And by the way, it started up today. Okay? So Dow falls 300 points, gives up earlier gains as Wall Street's struggles persist. Now, Dow falls 300 points today, gives up earlier gains. It was up earlier today. Why? It was up like 100 points today. This is very bad. Everyone knows, ladies and gentlemen, everybody knows. Everybody on Wall Street, and look, I'm not there are billionaires saying that the sky is going to fall. Nobody's been listening to them, okay? But I've been listening to them. The people who the investment banks, the hedge funds, the investors on Wall Street, what they've been doing is playing with the house's money. They were given $10 trillion in fiscal and monetary stimulus. So consumers and investors were given, the consumers had to be given the stimulus because Democrats, media, the experts, the authorities said we have to end economic activity. When they said we have to end economic activity, okay, when that happened, ladies and gentlemen, the Pandora's box of problems was opened. Okay, we opened up a Pandora's box of endless problems. You cannot end economic activity in the world's largest economy and other economies throughout the world and expect that you won't have a broken supply chain, energy through the roof. Fossil fuels are at record highs. I thought Mashed Potato Brains, our president, wanted to address climate change. Why is natural gas, oil, and coal at record highs? Well, you ended economic activity. Then you said, we'll just turn on the economy like a light switch, and that $10 trillion we pumped in, that's not going to cause any problems. Well, you tried to replicate or duplicate economic activity. It didn't work. You did so as a self-induced wound, and I explained that in the Federalist. Please read my Federalist article below. It's in the pinned comment. Ladies and gentlemen. My Federalist article is below. But I've been telling you, and share this segment everywhere. I know it's not that interesting, and people are going to roll their eyes. Oh, here he goes again. We are going to have a devastating financial crisis this year, unfortunately, and it's going to be because of the smartest people in the room. Our country has been run, and this not Trump's fault. This is the fault of experts and authorities and the Democratic Party and media who wanted to kick Trump out of office, and they said every single day, "Oh, it's too soon to open up." Well, we've been run by the equivalent of the Enron, the Enron CEO and CFO, and those people who ran Enron into the ground. Okay, the smartest people in the room made the worst decisions, and within the span of 5 days, ladies and gentlemen, you're looking at 1,600 points down in 5 days. It's going to get a lot worse. Even if it goes up tomorrow or this next week, it's going to get a lot worse. Okay, you're probably going to see the Dow go down to close to 20,000 point territory. Why? Because you're going to see hedge funds go under because of derivatives trades. A whole lot of other catalysts could take place, but I think Bitcoin at 10,000 and Dow at 20,000 or around 20,000, 23, 24 is very, very possible and I think likely. Give me your thoughts below. Again, I'm not giving any investment advice. No investment advice. But if you have any money in the market and you're about to retire, you would be foolish to stay in the market at this point. Give me your thoughts below. Hit subscribe right now to this channel. I'll be back in about an hour. Thanks, everybody.